morning, traders. We're about 2 hours before the open on September 16th. Want to get a video out today because I believe that a major support level is being breached on the S&P 500. This is going to have some follow through. So let's take a look at our last pick. LEN was the last pick, and it was a short. I produced that video before the open on Tuesday. We had this long red candle, and you can see that we've had follow through. This stock is not one that moves very quickly. This morning, the S&P 500 is down about 20 points before the open. The stock is indicated lower, so this is actually a nice pick. So here's why we like the trade. We had this upward sloping trend line that came through right here. We had a rejection of the major moving averages, long red candle through horizontal support as well. Yes, we can expect more downside on a stock like this. And here's one of the keys. We have lots of room to run. So there's no support in here that we need to worry about. This stock should be able to continue to move lower. We're going to be looking for a similar type of setup this morning. So let's go back and take a look at the market, see what it's doing on a longer term basis. We have an upward sloping trend line right here that's being breached to the downside. This is a big bearish candle. This was the Jackson Hole Fed speak where they said, listen, we're going to be taming inflation no matter what. If it comes at the cost of slowing economic growth, so be it. We have to rein in inflation right now. So we get this big negative reaction in here, and then we get a little bit of a bounce. This bounce, in my opinion, is because right now economic conditions have not deteriorated. So there's some sense that the economy is strong enough for the Fed to keep on its fast tightening pace. Then all of a sudden, we get this big drop on Tuesday. This was the CPI number. If you recall, I did a video way before the open, way before the CPI even came out, and I had a bullish pick because things were shaping up pretty well. We had this downward sloping trend line that had been breached. We were above the 50-day moving average. We had just poked through the 100-day moving average. Everything was looking good. Now all of a sudden, we get this nasty CPI number and the bottom falls out. So now this is obviously looking like a bearish flag formation. There's your flagpole, get a little bounce, and then wham, the sellers are right back at it. This time, it's a little bit different because this is a major support level. If I click the alert line, we're already going to be through it, so it won't draw properly. But if I connect those points, they come into play right in here. And yesterday we closed below it. This morning we've got the futures also trading lower. So just on a technical basis, this is a really good short. On a fundamental basis, we got some news yesterday, and it's starting to rattle the market a little bit. Everything was going to be fine with the Fed tightening until we started to see some signs of economic deterioration. Well, one of the market barometers is FedEx and UPS. The transportation companies ship product. And when they see shipments going down, it's an issue. FedEx said they see that a global recession is forming. They had expected that the reopening of China would produce some really nice transportation business for them, and they just flat out did not see it even when China reopened. And so they painted a very gloomy picture. That has investors rattled this morning. S&P futures are currently down, I believe, 25 or 30 points overnight. That means that we are going to definitely be poking through this horizontal support level. So yes, we could have a nasty day in store for us. And because we are breaking this horizontal support and this longer term upward sloping trend line, it's significant because I believe that we could test the low of the year over the course of the next few weeks, particularly if we start to see some weak economic reports coming out. Jobs remain steady. Got a good initial jobless claims number yesterday, 213. That's still showing strong growth. So the jobs are still hanging in there, but some of the other economic indicators are starting to soften. And Most of these economic reports are backward looking, and that's a problem with economic reports. They're backward looking. When you get statements from a company like FedEx, that is forward looking. They can see what their current business is and what their future prospects are. So current information like this tends to get very quickly disseminated in the marketplace. I'm expecting to see some market selling today. So let's take a look at what we've got. And here's a search that I ran. And if you'll notice, I have a stock that is greater than the prior day's low. So again, this would be stocks from yesterday. I want to make sure the stock is able to be below the prior day's low. If it's not, I have no interest in it. I'm looking for stocks that have recently broken a trend line because that is going to give me additional downward momentum. And in this particular case, I want to see a stock that has broken that trend line in the last 2 days. So this is a fresh breakdown. That's good because it means that I'm able to get in on the move fairly early. Option liquidity, also excellent. And let's put up one more variable here. I want a stock that is weak relative to the S&P 500 on a daily basis. And so now when I click this list, I'm able to quickly go through and take a look at some of the stocks that might fit this criteria. So I've already gone through and looked at a number of these stocks, but this is a process of just clicking through some of these symbols. So I'm going to show you some of the better prospects, and I'm not going to dwell on a lot of the other stocks. I can go through a few of them and mention why I don't like them. But here's an upward sloping trend line. You can see we're below all the major moving averages, where the market is still trying to break through this horizontal support. CSX, transportation company, has already breached on heavy volume. CSX is nice, but it's not going to be my pick of the day. I'm going to continue to go down. HD, super nice. Boy, were we killing it on this stock in the chat room. Beautiful upward sloping trend line breached, and man, oh man, did that selling pressure accelerate on Tuesday. So it's too far out of the gate for me right here. Do I still think it's a good short? Yes. For your purposes, I think we can find something that's just starting to crack down, like right in here, that has that potential. So that's what I'm going to be looking for. HON, yes, that has very decent downward momentum. So let's get through it. NTAP, I like this. You can see upward sloping trend line right here comes into contact with these major moving averages. So you get this big rejection off the 200-day moving average, big selling, little bit of a bounce. So there's your flagpole, there's your bounce. Now we're through it. That is a bearish flag formation, and we're penetrating these major moving averages at the same time. NTAP could be the pick of the day, but I'm going to continue to go down. ODFL, that is a transportation stock. Oracle. This is a really nice breakdown too. If you draw this trend line, you can see it really comes into play up here. But now you've got another support level that's formed right around this 100-day moving average. So if we draw to that, you can see earnings before the open, big negative reaction, rejection of that 200-day moving average. Now it's starting to sell off and go below all these major moving averages. And yesterday it had a lot of weakness. So Oracle looks very, very weak to me as well. Let's take a look at that 5-minute chart, and you can see steady selling all the way down. Oracle does not move fast either, and you can tell. Look at these choppy price movements in here, just back and forth. It never really gets going. This is pretty good momentum for Oracle. PAYX. This is a nice classic little bear flag formation. There's your flagpole, there's your bounce, congestion around that level right here where you've got all the major moving averages coming in, and then wham, now it is broken down, bear flag formation, plenty of room. That looks pretty dang good to me as well. Qualcomm, we'll take a look at that one. That looks pretty good. I'm just going through the list here. UPS, this is a beautiful, well-defined upward sloping trend line right through here. And I can click that and we can pass through many points. You'll be able to see that. So we've got lots and lots of touches. 1, 2, 3, 4 touches. We're through the 100-day moving average. We're through the upward sloping trend line. UPS is also going to be impacted by the FedEx news because they are a shipper. Let me take a quick look to see if I have any indication of where UPS might be trading pre-open. Yes, it's going to be down, but I think that it's going to have some follow through. So 185 is roughly where it closed. 171 is where it's going to open today. Gosh, that's about a 13-point drop. I think UPS is going to be a really good stock. I think it's one that you will be able to short today for day trading. Even with this big move, I think you're still going to see more downside on it because everybody's pretty concerned. So how would I trade this? And let's take a look at where 171 comes into play. 171 comes into play all the way down here. So it is going to test major horizontal support. I think this is going to be a really decent stock to day trade. I can't make it my pick of the day with a drop of that magnitude because that comes right down to a major support level, and maybe it just kind of flounders around there and digests that news for a few days. So let's go back and take a look at some of the other stocks that we had. We may be able to find a better short in there somewhere. And I've got a couple that I actually like. I think NTAP sets up really well. And you can see it's a pretty good mover. Once it establishes a trend, it's pretty orderly. So you get a nice steady downtrend, nice uptrend. Now we're in this nice downtrend. NTAP is going to be your pick of the day. That I like on the short side. So, Pete, we've got this major market breakdown. Do I come in on the open and load up on NTAP puts? No, I wouldn't suggest doing that. The market is going to open below this horizontal support in here. I would wait to see what the market does over the course of the first half an hour at least. If you see stacked red candles consecutively, stacked red candles, very little to no overlap. Let's go into a 5-minute chart. Let me show you what that looks like. It would look like this in the first half an hour. Red, 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 red. Just stacked with very little overlap. This would be a sign of very strong selling pressure. Yes, you can get short into that. But if you see anything else, even a green candle in between, no go. That means wait. So our most ideal setup, because we want to get short, is that we get some kind of wimpy little bounce out of the open with mixed overlapping candles. That will give us a good entry point. So let me find something like that. So if we open something like this, where we're going to gap down and then we're going to get this wimpy little bounce, down candle, up, up, down, down, overlapping all over the place. And then the opening gap down starts to show signs of resistance like this, a bearish hammer. Ooh, ooh, here we go. Nice long green candle, blam, bearish engulfing candle. So this little attempt to get back to this high is squashed immediately. That tells me this entire little bounce is vulnerable. This would be our ideal situation because now it buys us some time. It buys us a half an hour. We can watch NTAP. We can see if it's weak relative to the market. If it is weak relative to the market and we start seeing the S&P show some signs that the bounce is starting to stall, we know we have a good entry point for NTAP. But you will want to try and get short probably within the first half hour, 45 minutes, or hour. You want to be watching for that selling momentum to accelerate. This is a big breakdown, and I expect to see it. So we've got all the things that we need on a longer term basis to even consider some swing shorts. Let's put up the major moving averages so you can see where they come into play. The 200-day is way out of range. It's up here. You can see market's clearly below the major moving averages, clearly below this upward sloping trend line, clearly below this horizontal support, checkbox, 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 checkbox. Okay, finally, after all this herky-jerky all over the place movement, we have a small window of opportunity to try some bearish swing trades. We didn't have a good chance to get long until we had this nice long-term downward sloping trend line that was breached to the upside, double bottom, higher low, breach of that downward sloping trend line through a major moving average. Okay, we can swing some longs in here. We should get a nice bounce. Congestion here. Oh, hey, we got above the 100-day. All right, we've got a little opportunity in here as well. So your opportunities to swing trade all of this volatility are very, very narrow. You have to wait for them to set up. Then you've got an opportunity. We've got an opportunity right now. It may only last a week or so. It really depends on how far and how fast we fall. If we go blam, blam, right down to the low of the year, okay, our window has just closed. If we start seeing a nice drift lower, then maybe we've got a week or so. But as bearish markets go, the drops come very quickly and they can be big. And when we finally do find support like this, you can expect big bounces. And that's why you can't just get short and park ass, because you're going to get these big bounces in here. Unless you're buying longer term options that have 3 or 4 months until they expire and you're playing a longer term market sell off, okay, then fine, you can stick with those positions. But in the back of your mind, you've got to be telling yourself, hey, I'm expecting these bounces and I am ready to weather some of these bounces as long as that longer term trend line is intact. But if you are a short term trader, a day trader, someone who swing trades for maybe a week, 2 weeks, or less, then you absolutely, on these big drops, have to be thinking about taking some profits, wait for that bounce, reload. Now we're in good shape again. And if you're shorting up in here on this long red candle, down in here, you've got a doji formation yesterday that tells you the market could go either way, could go higher, could go lower. That's been resolved to the downside, and we've got all the other factors I mentioned. Now we've got a clean path lower. So yeah, you probably are going to be able to swing trade from the short side for the next maybe 2 or 3, 4 days. We've got the FOMC meeting next week. Everyone's looking for a 75 basis point rate hike. That also could spark some nervous jitters. Thanks so much for watching, everyone. Please leave your comments. I don't see any comments. I get maybe 2 or 3 comments. That tells me that you're either not interested in the content or you're not trading right now. Let me know what your issues are, what your questions are. I'll make sure to reply. Thanks. Good luck with your trading today. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.